And Malcolm, your team's work is a 7.1% GDP for China. That's an awfully good number. Why is the PBOC so concerned about the velocity of money? Why are they putting out these headlines, readjusting to a new normal?
Tom, there's this window to do it. That's one of the key reasons. The economy is going well. It's reflating. Factories are reflating. We've got the property market's been in a sweet spot. So if you're not going to pull back on leverage now, you're never going to do it. And the PBOC have recognised there's a need to do it. That's what they're doing, and that's what these credit data show today that came in late in our day. They show a real pullback in some of these shadow banking elements, things that the IMF and others have warned about for a long, long time.
That's right where I wanted to go, the shadows of China. When I look at PBOC, I'm assuming they're not an independent body. Does the government really know the shadow system of China's financial structure?
They're becoming increasingly aware and increasingly vocal that there is a need to curb it. So the breakdown of the credit numbers today, which show there's still about £1 trillion worth of credit flowing to the economy in the month of May, not too shabby at all. But the breakdown is where the action is. They show a big pullback in some of these shadow banking elements, which really does show that it's not all talk in China. The authorities have been raising the cost of money market rates. They have been trying to push the cost of doing shadow banking higher, and that seems to finally be putting a brake on some of these elements.
Okay, so Malcolm, so we also have this broadest measure of new credit, right? It slowed in May, which basically means that policymakers have been doing quite a lot to contain excessive borrowing. Will they continue to do so, and with what appetite?
Well, they sure seem to be having the appetite to put a little bit more pain in the financial system that many gave them credit for. The bond market's shown some stress. There's been some wobbles in the stock market, and all of this is related to this push to contain leverage. The real question is what happens if the real economy starts to slow? So far, that hasn't happened. Today's other data on industrial production, retail sales were all quite strong. So if the real economy starts to slow, well, maybe the central bank, like any central bank, may come in and start to relieve some of the pressure. But for now, they seem to be doing this sort of twofold measure, trying to keep the real economy humming, but also trying to put the brakes on some of the financial risks that have been swelling.